concerning about our accounting principles. Yes, today's principle I'm going to talk about accounting equation, and we shall look at another principle called double entry system. Double entry system. In the previous video, I talked about different stages of accounting, and I said we start from recording, talked about summarizing, analyzing, and recording our financial information. Today, we are going to start with recording step. Recording, and don't forget this is our first step. As we are recording, we need to know our accounting is governed by some formulas, and once we master these formulas, of course, we shall be able to do everything concerning accounting. We shall be able to know why we need to balance our books and why we should balance our books. I will start with this accounting equation. And the moment we hear accounting equation, this one we are going to be using it throughout, right from recording up to reporting stage. So we shall look at this as is the fundamental formula. What does it show? It shows the relationship between what the business owns. I'll talk about that. What the business owns and how the business is financed, how it is financed. This is very important. We need to know what the business owns. We shall look at some examples as we move on. What the business owns or controls, we shall go there. And how it is being financed. So from today, my learners, when someone talks about accounting equation, say yes, I saw it. See here, accounting equation. It is basically assets of the business equals to liabilities plus equity. Assets equals to liabilities plus equity. When you look at this formula, it is made up of three main parts. You have a part for assets, you have a part for liabilities, and you have a part for equity. We need to go into details and get to know as beginners what are the assets, what are the liabilities. My colleagues who are outside there, I'm not going to use complicated explanation for this. I know them as per different standards, but for my beginners, let's try to look at meaning of this concept. Meaning or explanation of key terms in accounting equation. Term number one, when you look at our accounting equation, right from today, I told you I'm going to take you through right from the beginning to the end. And now we have started with this accounting equation. You have to master it right from today throughout your career in accounting. And I want to start by letting you know what does this mean? Assets. I know some people may talk about asset as a resource controlled by the business, from which economic benefits are expected to flow to the entity. I don't want to use that complicated definition for my beginners. For beginners, I will say these are items that the business owns or controls. I don't want to enter that. For now, as beginners, let's say these are items that the business owns. And these items owns and which have value, economic value. Examples here, examples, we can look at, for example, furniture, where you work. Maybe you are working by student, you are lucky that you are working as you are studying this. You see you have furniture in the office where you work. Yes, it is an item owned by the business. Maybe you may have buildings, yes, where you operate from your business there. Maybe you may have land, also belongs owned by the business. Land. Maybe you may have machinery. The list is so long, etc. You can still continue to add on our list anything that the business owns. You need to include it there. 2. Another concept here. Hope asset is okay. For now, let's take it at that stage. Remember, at each stage, I will be advancing our concepts. At beginner's stage, let's go with that. When we go to intermediate level, we shall add. When we go to advanced, still we keep on modifying our definitions, our concepts. But for now, let's know that assets are items that the business owns, as you've seen there. Let's look at liabilities. Let's look at liabilities. We are looking at what business owes. This, it shouldn't confuse you. The other I said what the business owns. This owes to others. Hey, you see, even businesses, you may have a loan as a person, but even business may have a loan. Maybe you got goods on credit from suppliers. Once they supply you, those become your liabilities. You have not paid, and maybe you will pay at a later date or stage. For example, here, again, you may have accounts payables. Maybe we may have accounts payables. We may have wages or expenses. Let me say expenses payable. We may have expenses payable, and we may have things like loans, maybe from the bank. Yes, here I don't want to, someone would say you have to talk about current assets, non-current assets. All those things we shall look at them at a later stage. Don't mind whether it is a current liability or it's a long-term liability, total liability, because the formula talks about total asset, which includes both current or short-term and non-current. Even here we have short-term and long-term as equity. So basically, we need to know the accounting equation. 1 talks about assets. That shows items that business owns. We have seen the examples. The liabilities, what you owe or what the business owes to others. And the examples are there. What about the equity? We need to know another concept here from accounting equation. Equity. This is the residue interest of the owners. Residue interest of the owners, or we can call about someone can say the owners claim of the business, or someone can say the owners claim the business. We shall, don't worry my learners, I told you we are still at introductory part. Step by step, I'll keep on explaining more as we move on. What you need to do is to keep yourself with ProAccounting Academy. We shall go through all this. We are going to dig deep. We shall understand each and everything. For now, you must know that accounting equation is assets plus liabilities. Assets equals to, assets equals liabilities plus. You look what is this. We say assets are things that the business owns. Then liabilities, what the business owes to others, and equity is the owners claiming the business. meaning our total asset, whether it is non-current or current, must be equal to liabilities plus equity. In most cases, if not always, you'll find this has to balance, where our asset, what we own, is equal to what we owe to others and the claim of the owners in the business. We can take an example to explain or to understand this more. For example, we may find that you've been given a given transaction. Don't forget, we are at recording stage. So you've been given a question and you have to use accounting equation to solve it. Now, let's take an example here so that you can understand this. We can say, which name can I use? Maybe John started a business with cash, maybe 15,000 US dollar. John started a business with cash. Now, when someone says John started a business, what comes to your mind? Where did John get the money from? That's why we say it shows what you own and how the business is being financed. So when we talk of John started a business with cash of 15,000, the question should be, where did you get this 15,000? Maybe they give you more information by saying he invested his personal or used his personal savings, that is owner's equity. They're saying his personal, no, this is the owner is John, and they are saying he invested what he had saved, maybe in his bank equity to start a business, and this was maybe 10,000 US dollars. Then at the same time, they give you more information that he acquired a loan of 5,000. From where? Maybe from a friend, from the bank, anywhere from the bank. When you talk of loan, go back here to liabilities. You said among the liabilities, we have accounts payable, expenses, expense payable, then loan. Meaning, this loan is a liability. Once you get money from someone, of course, they are demanding we need to put it into consideration. So if you look at this, for example, so that we can understand the accounting equation, we are saying John started a business with cash 15,000. Out of this 15,000, what comes to your mind? Where did you get this money? Yeah, he said this money. We withdrew the money and invested. That was 10,000, and acquired a loan of 5,000. Let's see how we can do this using accounting equation. How can we handle that? Let's look. Let's try to look at this and see how we can handle it. This is very simple. I told you this is the fundamental accounting equation. Let's try to understand this accounting equation. Once you understand this accounting equation, everything will start being on your side when it comes to accounting. You say assets. You look at this. John started a business with cash. Remember, we say the cash. I explained to you the asset, and I said the asset is anything, any item of value that business owns, which may include cash, may include furniture, may include land, building, among others. Which means our asset number one here is cash of 15,000 US dollars. Then from there, they are telling us he invested his personal saving, owner's equity. We are looking at solution. Forget owner's equity, which is 10,000. You look here again, because it was not enough. He wanted 15. He acquired a loan of 5,000. So you can bring here the liability. That is loan of 5,000. Now, how can we use our accounting equation to do this? Yes, we can call this, it is assets equals Equity or liabilities and no problem. Liabilities plus equity or equity plus liabilities. Plus equity. Asset equals liabilities plus equity. How much is our asset? Cash, which is 15,000. How much is our liability? It is 5,000, right? Plus, how much is our equity, owner's equity, which is 10,000. Taking us to our accounting question of saying assets are equal. What you own is equal to what you owe to others and even to the investors or owners claim. So what you should know with this accounting question, of course, it helps us to see that everything the business owns, like asset, is funded by what the business owns. In other words, whatever we own is either funded by loan of that liability or owner's equity. We don't expect you to own something and we don't know how it was financed. Either it is financed by loan, you went and acquired loan to get money to finance what you own, or to buy what you have, like assets, asset like land, asset like building, equipment, among other assets. You must tell us that whatever you have is being financed by both of this, either liability or equity. So that takes us to the end of accounting equation. I want to thank you once again, and as we continue to move, as we look at these accounting courses, please keep in touch with us. In case there is anything you need to know, more details, go to your comment section in there. You put any question, I'll come immediately and answer. I don't want to leave anyone. Don't forget to subscribe so that you can easily get notification. Keep a note that this accounting is very easy if you keep with ProAccounting Academy. We are going to move together with CPA QA1. I will take you through every step. I'm not going to skip anything. Now you can see we have started recording. That is we are still at recording stage. I told you we have recording stage, we have summarizing stage, analyzing stage, interpreting, reporting, but right now we are still at recording. Don't skip any step. If you have missed this, go back, check our YouTube channel, that is ProAccounting Academy. Anything concerning accounting you need is there. Make sure you ask any question, even if it's not about this. Maybe you are at advanced level, you are at intermediate level, you are at any level, but whether you are practicing accounting, please come to comment section. We shall bring to you everything you need to know about accounting. Thank you very much. See you again.